What's up, guys? Welcome back to DCA. So what we're going to do in this video is take a look at the supply distribution of Bitcoin. We're going to do it a little bit differently than we've been doing it in some prior videos though. In this video, we're going to be looking at the supply distribution, which shows you the price at which individuals are holding Bitcoin all the way from 68,000 all the way down to $3,000. So we've mostly been focusing on this, time dating back to the beginning of 2021 in prior videos. But in this video, we want to look back and understand what's going on with basically the last two market cycles, because what we're doing here is attempting to understand both what the price may do in the shorter term, as well as on the macro scale, longer term timeframes. So what this metric is doing is we have a price. So you see all the way down from $3,000 up to $68,000, we see the price. Then on the secondary x-axis, so you have the primary x-axis, which is just time as per usual. And then you have this secondary x-axis up here, which goes from 0 all the way up to 1,000,000. And you can see that at any given value over here, we have a price. And then that price corresponds to one of these bars. That bar shows you at that price. So for instance, at $57,500, we can see that there are approximately 250,000 Bitcoin sitting right at that level. So that means individuals bought and have not moved approximately 250,000 Bitcoin right at this price level here. Okay. So we're talking right in here. Okay. So what this metric is good for. So let me just say this. This metric is going to be oftentimes infinitely more useful than any price chart technical analysis. So any traditional TA where you're going to see people drawing trend lines, etc. And the reason for that is because of the fact that this is showing you exactly where the Bitcoin are sitting on the network. Okay. So it's going to show you a realistic picture of support and resistance levels. So it's showing you the support and resistance levels which are going to form, and it's going to show you right where they are. Now in this video, we're looking specifically at long-term holders. We're not going to be very concerned with short-term holders here because we're trying to get a macro level picture of what's going on in this market. So I'm not concerned, if we go up $1,000, are we going to hit support or resistance there? We will talk a little bit about that, but we're going to focus on what's going on in the big picture. So we've been talking on this channel for months and months now about, why the market looks bearish. And a lot of people have been resistant to hearing anything about this. Now, if you were following this channel, you've been aware of what's going on basically since December. In the middle to beginning of December, we started talking about once you get below that 20-week moving average, that's a bad sign. So we went below the 50. And then once you go below the 50, you typically head down to the 100-week moving average. We've talked about this all many times. But what we're going to try and do here is look at the supply distribution, both from this market cycle and from last market cycle, to sort of talk about what are some worst case scenarios? What are some, if this drags on and drags on and drags on, what could that mean for this market? Because ultimately, if you want to live in, if you want to be the kind of investor who ignores what the possibilities are because it sounds scary, then you're in the wrong place. Because what we're going to do here is break it down and try and understand what's going on and what could happen. Remember, we always talk about the fact that individuals who are confident in the asset, who are confident in their approach, who are confident in their strategy, these individuals make money in the bear market. Investors become wealthy in the bear market. They don't do it in the bull market. If you are investing in the bull market once it's apparent to everyone. Most people got in after January, once Bitcoin was already at $40,000. So you were taking on all this downside risk, tons and tons of downside risk to capture, 20, 30, 40% gains at most. So that's why we've been talking about, a couple core principles on this channel. We hit over and over and over again. A is what we just said. investors become wealthy in the bear market. B, it's why we approach the market with the dollar cost averaging strategy, because you never know where the end of the bear market is. So we were dollar cost averaging here in May, June into July, not knowing. I was quite confident that the market was going to continue trending down from here, but it turned around. We had a turnaround. So that was perfect, because once we started to get below some of these, price levels around 50K, we started dollar cost averaging. And just like normal, once a week, I was dollar cost averaging. So when we did go back up, I was able to sell some of that and sell some of the altcoins that I had been dollar cost averaging into throughout that bearish portion of the market. And that came back to us again in the beginning of December. Once we started to get below around 50K, we started dollar cost averaging back into the market. And we've just been doing that since, because we don't know where the bottom of this market is going to be. We can look and make some educated assumptions. We can try and understand what's going on the macro scale and how that relates to the current price structure of Bitcoin. But ultimately, we don't know. Every market cycle is going to present its own unique set of challenges and opportunities. And it's our responsibility as investors to understand what those are, what they could potentially be, and how we will react to them if they come to fruition. Okay, so like we said, just to quickly summarize this, what we have here is a number of Bitcoin. So like this price here at around 57.5, there are almost exactly 250,000 Bitcoin. That means people last moved Bitcoin on the network right at this level. Okay, so we know that that is going to be an important level because you have a ton of Bitcoin sitting there. And in general, what we can do is so let's take an example here. So from around 40K, and we'll go all the way down to around 32K. So you can see right in this range here, 40K all the way down to 32K. We have a lot of Bitcoin held here. And remember, we're looking at long-term holders. Short-term holders are going to be individuals that are going to be wildly reacting to price. They're much more likely statistically to sell the asset in the short term. In this case, short term equals less than 140 days. So we're only looking here at Bitcoin that have been held for over 140 days. All right. And so what we're trying to do is understand, where are these strong levels of support or resistance going to form? And when we're talking about long-term holders, we're primarily talking about levels of support, because long-term holders in general, we see historically, they will not sell the asset when it drops below their cost basis. Because, if you're a long-term holder, that means these are typically disciplined investors. And so you're going to see that if it does happen to drop below their cost basis, they will not sell. They'll continue to hold it. In fact, this is how oftentimes a market cycle comes to an end. The bottom reaches, it sort of bottoms out and it can't go much lower because you run into supply shock. What is supply shock exactly? It means that, you've reached a certain point where you only have buyers. No one else is left to sell. And so what we're thinking about here is, when you reach certain depths of the market, you've ran out of, all the short-term holders have capitulated, and a lot of the weak hand long-term holders have capitulated. And so you're only left with strong hand long-term holders. And so what we're seeing here is basically, statistically speaking, levels at which these individuals are going to be more diamond-handed. They're going to hold the asset regardless of what the price does. If we go down to 20K, most of these people that we're looking at right here will continue to hold. If we go down to 10K, most of them will continue to hold, just statistically speaking. So under normal market movement, these guys are going to form your base of holders. So these are going to be support levels. Now let's talk about where we're at right now. So we were saying back in, back when we were up here at around 45, 46K back in March, we were talking about the fact that we were looking for a support level to form at around 38, 39K. And sure enough, that's what happened. We sat right at that level, for about 3 weeks now. Now, unfortunately, we're starting to drop below it. So if you look right here, we can see that these long-term holders form right in this 40K all the way down to the mid 39K, and then realistically all the way down to around 37.5. But notice once we start to get below 37.5 here, if we get below this 37.5 level, this level of support begins to slowly dry up. And this is going to matter for the fact that, let's go back to the 2018 cycle. We saw the price of Bitcoin bleeding, okay? It started right here in December. And how long did this bleed continue? It basically did nothing but go down with small upward movements for a year straight. We went from December of 2017, all the way until right here in November of 2018. So these events can go on and on and on and seemingly never end. Imagine, we're sitting here kind of in the beginning/middle of 2022. Imagine if 8 months from now, we're still doing nothing but sort of trending down to around 29K and, getting little bounces up to maybe 32K and just doing that back and forth for nothing but a year. A lot of people are going to lose their patience. They're going to lose their nerve. And then how did these individuals that held their nerve get rewarded? Let's say you bought at 12K and you held and you held and you held. You held it as it was bouncing down to 6K, going up to 8K, bouncing back to 6K. How were you rewarded back in 2018? You were rewarded with a nice slap in the face as the price went from 6K all the way down to around 3.4K. And what did we see after that capitulation? Just a few days later, another huge capitulation wave because, people can only take a beating for so long before they finally give up. So you basically have these three groups of long-term holders that have formed in this market cycle in particular. You have this first group down here. We see the 32K up to around 41K guys. All right. These guys right here, these are the guys we're counting on as support right now as the market is grinding down. Then you have the second group right in here, these buy the dip guys. So you have these bought the discount of this market cycle guys. You have these buy the dip guys right in here from 52K all the way down to around 45K. And then you have the bought the top guys. All right. And that's anywhere from around 54K all the way up to 68K. And so you have these three different tiers of long-term holders. Now, this isn't to say any one of these is smarter than the other. And many people are going to fit into all three categories. So these people in these three tiers are going to be the individuals that have become the new long-term holder group. And these guys will then, many of them will hold into the next market cycle. All right. So that kind of establishes where we're at right now. What we need to do though is then look into the last market cycle, because this is going to show us some of the more severe potential cases that could occur if this grinds on and on and on. So when you get below this 32K level, you need to realize the fact, you need to appreciate the fact that the market overall is risk off right now. People are not FOMOing in to risk on assets. All you have to do is look to the stock market. We're seeing, premier level assets, premier tier assets getting sold off. And these are all coming from the tech industry primarily. And we're seeing that the Bitcoin market or the crypto market in general, the digital asset class, has become very similar in this bearish segment of the market that we're in to that group of assets. And that's for the fact that, we're seeing the DXY rise. We're seeing inflation rate out of control. We're seeing the Fed raising interest rates. We're seeing the Fed pulling assets off of their books. So this combination of events that is occurring is resulting in things like Bitcoin, things like Ethereum, things like your high risk assets, your traditionally your high return, high risk assets. You're seeing these things being sold off. And we have evidence from the past, from prior stock market cycles, that show if this thing gets out of control enough And these markets can be very reactionary. It can sort of snowball out of control, and it can take longer than you may expect. It can also turn around faster than you may expect, but it can move in a downward motion for longer than you may expect. And so that's what we at least want to understand here. And so if we get below this 32K level, look at how very little resistance there is. And we'll just mark this here from 32K right here all the way down to around 20K. They're simply, and we're going to change this color here. We're going to make this red because this is not good. So down in this range, you can see there simply is not a lot of support in that range. It's not until you get down to the prior all-time high in that last cycle that you really have any support, because we did not spend any time in this 20K up to 30K level. We blew right through it. We got there, sort of had a little correction at 20K, and then blew right through it in December into January. Okay, so people need to appreciate the fact that, the common saying is, oh, if it ever gets down to 30K, it doesn't matter. I doubt it will ever get there because Michael Saylor is going to buy, et cetera, et cetera, et cetera. People are not FOMOing in to risk assets right now. Now, it very well could be that if we get down to these levels, then that corresponds to prices in the stock market that, may start a recovery because simply it's at too much of a discount. However, when you look at this, when you look at where we're at right now, we're already at 37K, and, the markets could potentially continue to bleed for much longer than they have. The Fed hasn't even started really pulling assets off of their books yet. When they start doing that, they're going to be pulling money out of the markets, billions of dollars every single month. And when they're doing that, the markets very well may continue to bleed. Now, like I said, we're only preparing here for sort of worst case scenarios, but to only be preparing for a best case scenario is, quite frankly, it's foolish. It's an amateur move to be saying that, I'm only going to look at the data that supports the fact that the market goes up. Do I think that Bitcoin could possibly drop that low? I'm going to be quite frank here. I think it could even potentially, I'm not saying this is going to happen, but I'm going to tell you, I think depending on what happens with the general market, we could potentially even see prices lower than 20K. You have to remember that fear and panic are they're contagious. When things start getting really ugly, and if the general market is very ugly, you can see that we don't have a ton of support below us. We have all the way down to 32K, but if we start getting below that, and the big time buyers are not in a place where, they're feeling like, the market, just the way the market is in general, is conducive to them taking on these additional risk assets, you simply don't even have that much support down at 20K. It's not until sort of 11K all the way down there where you start seeing large levels of support. So do I think that we get below 20K? No, I don't. But I do think people have to understand the fact that we've only ever been investing in Bitcoin since 2010 in a broader bull market. The market has never experienced a significant recession in this entire time that Bitcoin has been being sold on exchanges. Okay. So we've been in a relative golden age of the markets where we've only seen up, up, and up. We've never really experienced a massive correction. We're talking on the order of what you saw back in the year 2000. Because if something like that happens, then, a lot of the metrics right now tell us a normal market cycle bottom would take us down below 24K. That would be a normal market cycle bottom, like we've seen in 2018 and then in 2014 into 2015. That's a normal market cycle bottom, is down here at 24K based on realized price data, which is average price that Bitcoin has held across all holders. It's down at around 24K. We've traditionally seen the price go below that. Now, what if the broader market enters an actual bear market, an actual year 2000 type bear market where the market just crashes? I'm not saying that's going to happen, but If that were to happen, you're going to see that these, these traditional type downside moves that we've seen in the past are going to look like child's play, because Bitcoin may hold up fairly well in relation to some things. And then maybe, it is a normal type correction where we get below 24K down to around 20K and sort of meet our support level there. But a lot of your altcoins, for instance, are going to get annihilated. Like you can't even imagine. Many of them go away. In fact, I would say the vast majority of them go away, never to be heard of again. Let's kind of talk about where we're at right now, and then finally summarize with where we could be going. So we are at 37.5. We've lost some of our better levels of support at, all the way up to around 39.5. So now we're grinding down through where we're at now, which could take us all the way down to 32K. If we don't get a significant level of support at 32K, if you don't see a lot of buyers step in there, then you're going to be looking at around 28K. That's the next level, right in this 28 up to around 28.5K. That's the next level where we have a significant level of support at. So, a large number of coins were bought right there. But that's only 200,000 coins. We're talking about grinding through, several million coins right here where we're at right now. So if we get below this 32K level, then you're just quite frankly looking at scant support. And if people have been getting hammered in the stock market, if they've been getting, hammered basically left, right, and center in every aspect of the market, where, what makes you think that they're going to have the type of free capital just to flow into Bitcoin? I don't think that will be there. And I don't think people are appreciating that Bitcoin does not operate in a vacuum. It operates under it's part of the whole spectrum of the market. It typically goes, the stock market's doing well, people take profits from that, it comes into Bitcoin, Bitcoin's doing well, they take profits from that, they put them into altcoins, or they use Bitcoin as collateral, etc. So if you are getting hammered in the stock market, if you're down 50% in the stock market, and you think that these big time buyers are then going to have free capital to just pour into Bitcoin, I think you're joking yourself. Bitcoin is not acting by itself. It's acting as a part of the entire market. So I hope, I keep making videos about this. I hope some people are able to take some of this advice to heart. I've been telling people ever since December, it's looking ugly. No, not many people wanted to listen back then, but, now kind of everyone's caught on because, a lot of the content creators, once it's so obvious that, it's basically slapping them right in the face, then sure, they can make videos about it too. But I still don't think people are appreciating what your actual downside risk is. And I don't think it's necessarily going to happen right now, but at some point, one of these market corrections is going to clean out the crypto industry. It's going to sort of clean house of all the junk projects, of all the crap, of all the meme coins, etc. And you're going to see those get destroyed. So if you're heavily invested in those, and that's sort of primarily where your money is sitting, I think you need to take a step back, understand how the market works. I'm just letting you know that this belief that the markets can only go up, that everyone's going to be there to step in right at 30K and just turn the market around. I think that's a bit naive, and I think it's a bit foolish, and I think it's something that's being spread on social media by people who have no understanding of how markets work. So that's going to be it for this one, guys. Until next time, as usual, see you.